Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, November 20th, 2024. It is 10:42 a.m. Eastern Time. I'm starting the video and just wanted to give you a quick update before we get the big earnings from NVDA tonight. That is the everything for the market. It is, like I said, can think of it as all Mag 7 earnings and big Fed meeting and everything wrapped up into one. At least I believe that. It has the potential to most certainly, and I believe it will, in relatively short order, make or break my scenario, my market top call that goes all the way back to June of this year. We're still there at that level, and we're either going to make or break it because we've already had a reaction off that level the first time. Let me park that. Since I started out here on natural gas, let me just knock this one off quick. Just wanted to give you my thoughts. So as I pointed out, got a post out to you. We hit the next targets. Last update I gave you, we hit this target here. This is Nat Gas futures. These are all 60-minute targets. Targets on the 60-minute chart, but again, I have the longer term chart, what I'm going to show you. So as I mentioned, we had, just like we had back here, we had a divergent high there and we got a pretty healthy correction, and it's all it was is a corrective wave and an ongoing uptrend. You can see, at least in the very near term, we have all the makings of an uptrend, and uptrend is simply any security making higher lows and higher highs. That's what this is. We've now taken out that previous reaction high, and that leaves this big one here. So, as I mentioned, it's quite often, it's been basing, if you will. Natural gas has been towards the bottom of its range, and it's been a great swing trading vehicle. And there have been plenty of times we've been able to sidestep when a target's hit and you get the divergence. Even that last one could have recycled back in on this pullback here to support. So I'm going to give it a little bit better than coin toss odds that we probably will burn through this divergence. That's just kind of my gut feel based on how I know natural gas tends to run. Once it starts to get going and the masses, the majority of nat gas traders realize there's now an uptrend, they tend to start piling on and you can burn through divergences. So now, a little better than coin toss odds, meaning a little better than 50-50, we'll burn through these divergences and go on. If not, it's most certainly, as I like to say, and you've heard me say this 1,000,000,001 times before, resistance is resistance until unless taken out. So what I can tell you definitively, I just gave you my opinion a second ago. Definitively, I can tell you we're at resistance with negative divergence, and so the odds for a reaction are elevated. Where to? Well, to any of the the former price targets. You don't really want to see this one taken out. That would be a max pullback. It's big divergence. We could get it, and so. The best thing to do is, if you've been in this trade, and again, there's been dozens of entry points over the past couple months, and some traders micromanage positions, and I do that at times, and then sometimes I decide to sit tight and hold. So let me show you UNG, and then I'll get to the long-term charts of Nat Gas futures. So there it is on the 60-minute chart. Nat Gas futures that I just showed you were up 20%. No, 25% off the divergent low. I think it's a little less here. Yeah, it's only about 16% or so in UNG. Why is that? As I say often, it's because this is not natural gas. This is an ETN. It says here ETF. It used to be an ETN. I don't know if this is a misprint on the. Doesn't matter. I prefer the futures, but if you trade this, if it's an ETN, you're just going to get a K9. I'm sorry, K1. K9's a dog. You're going to get a K1 tax form reporting, which, do this, maybe keep it in your IRA. So all I can tell you is this is a previous reaction high here on UNG. Traders do look at this chart. It does matter. I put the highest weighting on the futures, but I do look at both charts. And so if we can pop that, you have this basing pattern here. Sort of takes the form of almost an inverse head and shoulders pattern too. You look at that. So if we can pop that, it should take us up to these deeper targets. Remember, this is a trade. I've been highlighting these divergent lows for months. We've had multiple targets. I still maintain these longer term targets. As I say here, best to align those targets with price targets on UNG with the targets on NG, natural gas futures. Why is that? Well, you have, for lack of a better word, I guess you'd call it decay, just like with leverage ETFs. Even though this is not a leverage ETF or ETN, you have tremendous amount of slippage, underperformance fees. They're rolling the futures. There's costs involved. It does a good but not perfect job of tracking the natural gas prices. So over time, this chart's going to look different as it does. This is UNG on a daily I just flipped to, than natural gas itself. Because again, the underperformance you're going to get over time. Now, it's a good vehicle if you don't trade futures. You don't have many choices. If you don't trade futures, you're going to need to use an ETF or an ETN. So that's it. So you have this potential downtrend line to watch here as well. Secondary trend line, and these are all potential targets here on this daily chart. So still big positive divergence, aka bullish divergence. And so although we've gotten these little swing tradable opportunities here on the 60-minute chart I was showing you a minute ago, the longer term charts remain constructive. And if we can just kind of reach escape velocity, if you will, this has the potential to run. Okay, and I've showed you this chart quite a bit recently. This is natural gas futures, NG, Nat Gas on stockcharts.com weekly chart. So you're going back years, and I've showed you quite a bit. When you get these, I look for the divergent lows and divergent highs when I want to short or get out of a long position. But the divergent lows, you can see they're all marked here, and I've measured all the rallies that came off those divergent lows, 222%, 160. I'm just showing you the number. This is the 222%, 160, 234, 207, 563, and so we're only at that last one so far at the peak here was about only 113. I still maintain, I think if we can pop this level, these recent highs, let me crosshair it for you and tell you where that is. I think that has a good chance of doing the trick here. Let me put on the crosshairs, and so really about almost where we were today. This is an end-of-day chart. So what you're looking at, the $3, that's yesterday's close. Today, I can tell you right now, I'm looking at another monitor. We're trading. We hit a high of almost about 315 today. So we're right there. And here, I think you can see it in the video. You have a couple reactions there. Obviously another one there and there. So if we can pop that, especially if we can pop these two previous reaction highs, which is about that last one's about 365, I think we can punch on up a quick punch up to that $5 target that I've been eyeing for a while now. And that's still a pretty healthy gain if so. And then look, if it may not be straight up, it could be. Sometimes natural gas, look, when she wants to run, she can really run. That's the nature of this beast. When it finally hits that was kind of full throttle modes, and you don't want to be short or on the wrong side of the trade, and it goes either direction, right? This is why stops are a must. Also, take your position size down so you can stomach the volatility and allow for wider stops. But if we pull back, you can see here a potential uptrend line, and that's an objective level. If we do pull back, to maybe add on or re-enter a position to take it out. So there's your update on natural gas. Now let's just finish the video talking about the stock market now. Today is the big day. It is NVDA, again, by far the most important stock, not just psychologically. That's a big one. King of the AI bubble, AI hype. Also a mathematical importance, the biggest component there in the it's the cap weighted indexes, the Nasdaq 100, now the S&P 500. So this is NQ. So on Friday it was in the comment section, and then I covered it in a video a couple days ago. Favor to bounce off this level right here, this support level 20,420 up to this level, and that's exactly what we got. In fact, if you missed it, you had another opportunity to buy it there, and then we reversed a hard reversal, which I like to see, and then that's the update I just gave you. Support is support until unless broken. So right now we are at support. That's this trend line support. I don't expect big fireworks before NVIDIA reports tonight, so that's probably it today. We'll probably bounce off that. Again, support is support until unless broken. It's another tag, so probably a reaction, but I don't. Again, NVIDIA is going to make or break it. The arrows I had drawn Friday, and I have this. Once this trend line goes, that's the sell signal. The trend line and that intersecting 20,420 support. Again, recently it's these last couple lows right there. So If it broke right now, anytime before 4 p.m. today, take it with a grain of salt because NVIDIA earnings is going to make or break and turn this thing one way or the other. I think it will be the catalyst. I can think of no other catalyst. Somebody made a comment about, Biden kind of snubbing Trump on the way out by giving Ukraine, access to U.S. long-range missiles, which Putin already said would be pretty much directly cause for him to use nukes. We can see that going on, and someone's comment, if World War III doesn't cause the market to drop, what will? I'll tell you what, it's NVIDIA. People, there've been rhetoric and things heating up over, Russia, China, U.S., what's going on in the Middle East for a while. And the market kind of just takes that stuff in stride. NVIDIA, it's either going to make or break the rally. That was our last divergent high there, big drop here. I just jumped out to a 2-hour chart, guys, by the way, to show you that August 5th lows, it's the same trend line. So we're testing that. It's an important trend line. And when it breaks, I believe it will break. But ideally, you want to see us trading below there tomorrow, or after NVIDIA, not the immediate reaction. It'll help. It'd be great to see the initial reaction take us down below there, and then the conference call, everything else, just build on a drop there. But just to recap it for you, that's the 60-minute chart. Let me go back here. All right, so here's my daily chart. This is 2 years. I'm going to zoom in. Before I do zoom in, just want to say I maintain this target. These are the same targets. They have not been edited, modified since early July. I put these out right before the NQ peaked, and that final target is still roughly 45% or so below current levels there, that T9 level, and that's about 15,340 on NQ, and it would be a 61.8% Fibonacci retracement. My 8th price target, which of course, just like T9, is based on price support, but it also aligns perfectly with the 50% Fibonacci retracement. And T6 was already hit. We already got the 32% retracement. That's where we covered our shorts there in reverse long. So this is just a continuation of really the same trade, if you will, the same market call. And you can see we peaked so far. We ran up. It's right then we hit T6, and nothing. You're not going to go from T1 or from that level to T9 without counter trend rallies. We already had a really big one, and now this also gives us effectively a double top. It gives us even bigger, much bigger. We had negative divergence at that high. We have really big negative divergence now at this high. And again, so I think NVIDIA has a chance to make or break it. If we go up much above 21,000, which was my ideal market top on NQ, then I can't be right. But no, it doesn't mean we can't go up to 22,000 or 23,000 and then turn around and come down. It just means something else is going on. I'll have to sharpen my pencil, see if we're going to go maybe into a blow off top phase. I don't know, but this is still the way I favor. Nothing has changed. I haven't waffled on that one bit. We kind of pushed the upper limits of where this bounce could go, but right back to where we started. So again, the call was on, it was a price call, not a timing call. So we're back to the same price level. And here's that trend line that I just showed you on the 60-minute chart. So just to mark the salient levels here. And again, all that matters really is after NVIDIA reports. Let's see what happens tomorrow into Friday. Break of this trend line. Now remember, we've already checked these boxes. We've checked T1 through T6. They've all been hit, which means we could certainly have a reaction on any or all of them on the way down. But the odds are much lower now. And I wouldn't, my advice, I can't give you advice. My personal preference, I should say, is to not try to game any, to sit tight. Especially if I like if the market doesn't like what NVIDIA is selling, I will then increase and go to an aggressive short position. No reason to be crazy aggressive short or long right now. In my opinion, you're kind of a gambler if you do that with NVIDIA reporting. But after NVIDIA reports, you can see pretty decent reaction on that former T2 level there, or pretty decent support, about 19,000, almost 20,000 right there. But either way, I just wanted to reiterate that these targets have all been hit. This is the big one. Again, I don't know why, but I know why. I'm studying the charts. A lot of this is intuition, experience, gut feel, but I think that's kind of the lights out level. If we pull back down and take out that 18,504 with that former T5 level, I think it'll do the trick to just kind of open the door, the floodgates. And I would not be, although we could certainly have another reaction at T6, I'd probably be sitting tight, riding out any counter trend bounces. And I know I'm getting 5 steps ahead of myself right now, because here you are probably saying, Randy, man, you're talking it's 45% drop. Market's right off all-time highs, not far off there. Yeah, so a lot has to happen. First thing that has to happen is we need to break that trend line. We need to break it after NVDA reports. And then, go down and then really see 18,500 go. And then at this point, if and when that goes, and if we get in that waterfall type selling mode down here, I would say then the odds shoot up significantly. I would say to probably 80% or higher that my deeper targets, remember T9 is still lower, are then going to be hit. And probably a lot sooner than most can even fathom. That's just the nature of the stock market. It tends to fall a lot faster than it rises. That was a matter of, what is that? These are daily candles. So just in a few weeks, we got down there, and that was, I think, a 17% drop. And look how long it took us to regain that back. All this time here from August 5th to right there. And you can see how long, it took a while to get there. It took longer to get there on the way up than it did on the way back down as well. So that's why I spend all this time talking about these, especially on short trades. You got to have your ducks in a row. It's one thing, short sellers are a very small, a rare breed, relatively. Very, very few market participants shorts, usually professionals. And, and I've been doing this, professionally for decades now. And I like it. But like I said, you have to be Johnny on the spot. You can't be too late to the party. When the lights come back on, it's time to get out, leave. In other words, don't stay late. The reason we covered there. If you didn't cover that morning, it was an explosive rally, as I predicted it would be. I used the word explosive, I believe, on the morning of August 6th, potential explosive rally, and that was it. And we rocketed back up. That was a huge gain right there off the initial bounce. So the point being, if you are going to short, have your trading plan ahead of you. Don't run around like a chicken with your head cut off and start going down. You need to know where you're going to cover them, when you're going to sit tight. And likewise, if we blast on up here and something else is going on, again, I cannot rule out the potential or the possibility or a probability, a decent probability of a blow off top. I don't see it. I'll start talking about it if we get much above the recent highs and hold that into next week. Nothing that happens this week, no matter where we go this week, is going to change the longer term outlook. Even if we make a marginal new high, it'll still be a divergent high. So again, if I decide to abandon these targets and that longer term outlook, at least for the time being, that will not be any earlier than next week. I just want to let you know that. Okie dokie, that's it. That's the trading plan. So, increase, add on, or if you don't have any positions that you want to wait till NVIDIA's out of the way. We just hit the trend line right when I got it out to you, and so far. So there's if you want to trade it, the bounce to be made. Let me show it to you on QQQ. Sometimes forget that a lot of you folks prefer the ETFs. So this is the purple is the same primary trend line off the August 5th lows right there. Nice and clean, and another distinct reaction today. Right when I got that NQ chart out to you, this QQQ was there as well. And there's the typical reaction. Remember, NVIDIA hasn't reported, so you're not going to melt down, do anything big before earnings. So it was a bounce off that level so far. Your resistance levels there's this big old gap here. That's what traders trade off of. That aligned with that bounce target I had given you on Friday on NQ. So we backfilled, we rallied up, tested the bottom of the gap. Should we enter the gap, then the next resistance is going to be the top of the gap. And then there's not a whole lot above that. You have that previous high right there. All right, let's just wrap the video up by looking at the MAG, as I like to call them now, MAG 8. really, you can call whatever you want. It's just the top holdings, usually the top within the top 10 of the Nasdaq 100. Key levels. So Apple that we're on a 60-minute chart. April lows right there, and you can see we've been dancing up this trend line. So that's the trend line. If you want to set a price alert to watch on Apple, you can see it's the same one I had on the daily chart. This is actually still an active trade. Gave it to you as a setup here with a sell signal or a short entry to come on a break of that's primary uptrend line, which we got. We hit my first target. We bounced as expected, and the bounce has been relatively muted. We've been, I always say a reaction can come in one of two forms or a combination thereof. It can come in a bounce on the initial tag of a price target from above on a short trade. You're either going to bounce or consolidate in time, and quite often this is just a little of both. So it's a bounce, not very much. Mostly consolidation above T1. So obviously this trend line will most likely do the trick, but T1 was the support that I was first targeting, 221.67. We hit it, and so now we need to break it. And when you see that, when you had a little overshoot, you really want to see the recent lows. So you look at the candlestick lows right there. Once they get taken out, that'll open the door to T2. And then you have T3, which also comes in around the 200-day moving averages, and then T4. So that's Apple. Apple, again, coming off the divergent high, gave us a sell signal and still below that divergent high. NVDA, just a beautiful looking chart here. I'm just clicking the different boards. But the big picture on this one, this is a clean board. This trend line here, I just can't say enough about it. October of 2022 lows. Lots of nice clean reactions. Again, this is a super clean, well-defined trend line. With so many reactions, and then you have price support there. So this post earnings, if NVIDIA is down here, that's a major sell signal, and it's going to increase the odds at those longer term targets I gave you back in late June, which are right here. Again, potential means not a current target, so T4 is still the final target, down all the way down around $40. Should that be hit, that would be a monster trade of about 71%. It's not going to happen in a week, 2 weeks. Those targets would probably be hit in 2025, that T4, if it's hit. First things first, we are above trend, the primary trend line. We broke this little minor uptrend line, and we're back testing it now, so there is that. But again, they're reporting tonight, so we'll see what happens there. Not much more to say on that. Let's just wait and see. And again, it's going to make or break the rest of them. If NVIDIA craps out, it'll take the rest down with it. Microsoft, remember, recently broke down this blue uptrend line here, back tested, so far rejected. I have a lot of lines on this chart. Ideally, for the short case, I want to see Microsoft start to roll over off that rejection, and especially not take back the uptrend line there. And if it does, then you have each of these previous reaction highs will be bullish if taken out. One there, and of course that all-time high. If it does, I can tell you I might be talking in 3 months from now. I can tell you if I take this divergence line, that if any new high anytime soon would still be a divergent high. But again, you won't want to ride it out because that would be a rally of, let's say, just to get to test that previous high, it's almost 14%. So we could go up another 16, 17%, make a marginal new high. So let's see what NVIDIA does. That's my preference before getting too crazy short or long on the Nasdaq 100 or any of these individual stocks, including Apple. Apple, just to loop back to that, Apple's not going to hit, most likely won't hit T4 if NVIDIA, the market likes what they're selling and it takes out new highs and starts to, especially if it burns through the divergence. But if NVIDIA does go on and crap out, I'll most likely add additional targets. If you want to know where, this was a big level back here. I was highlighting all the way back here as an important level, and we kept holding that, and we had a divergent low. It was major support. I gave a couple buys on Apple there and there because that was big to me, was. And if it was big support back then, that's why I colored up purple. The fact we had two successful defenses and nice rallies off it makes it even much more significant. So if you are looking for a longer-term target, if NVIDIA craps the bed tonight after earnings, that's a long-term swing target for Apple. And then it's kind of a lights-out level if and when that goes. Then that's going to increase the odds also that my long-term targets are going to be hit. Alphabet, kind of hanging in there. But again, a lot of most of the Mag 7 are well off their highs. They peaked back here in July, like the Nasdaq 100. You have this little minor trend line that needs to break on Alphabet, then the 200 days, and this yellow uptrend line. So this is the critical level here. Big sell signal if and when that primary uptrend line right there off the January 23 lows goes, because if that goes, you'll have also taken out those critical 200-day moving averages that traders love to buy tech stocks on, and defines trends. When you blow them, you break them. Short rallies back to them. Once you recover them, be long and strong, buy pullbacks too, but then stop out of your longs and or reverse short when the 200s finally give way. Again, you have to take it collectively. They broke there, but that was also when we were covering our shorts, because almost everything else at the time, all the big stuff, the indexes, the big market leaders, most of them were hitting their 200-day moving averages and bouncing off them as expected. And so that's why, no, Alphabet did that after. That it bounced on the initial one. It just had a quirky follow-up drop there, but everything else was still looking good at that time. So that's why that breakdown didn't stick. Remember, that was the August 5th low. So keep forgetting Alphabet kind of had that little one-off or new low. Amazon still above the 200-day moving averages. Big divergent high. Remember, I took away the question mark, or should have checked, because that was kind of predicted. If we went up, we might make a new and divergent high. I still need to break this primary trend line here. We had that one little whip, 1 day down. Again, when on August 5th lows, when everything else hit support. So Amazon was one of those that overshot it, but then came right back up and held the 200s. They defended it very well after that 1 day wonder down through there, right back there. So that's a big level, the 200-day moving averages, and they're just below that trend line there. So that's it. Meta is broken below that trend line. It's not super well defined, so I really want to see Meta lose the 200-day moving averages. Tesla was recently threw it out as a trade. I told you I still like it. I think Tesla has a lot of downside. The technicals are what's, you've got the big divergent high. As I mentioned, this is the first divergent high on the daily chart since back here, and that one cut the stock in half, I think, about a 40-something% drop, if I remember. Broadcom is the last one of what I call the Mag 8. Again, beautiful uptrend line. Highlighted it back here. It hit the trend line and the 200-day moving averages. Hit them again there. On a scale 1 to 10, those were 10s for buy points. They were both highlighted at the time. And then we're there again now. But the thing is, sooner or later, all trend lines give way. Based on these divergences and everything, I think it's going to come soon. But until it does, you can't say with the highest degree of confidence. All I can tell you is, if you look tomorrow or Friday or next week, and Broadcom and everything else I just covered, majority, 60-70% of them are below those key supports I just highlighted. For me, that's an all-in moment, meaning full short, whatever that is to you. All right, so that's it. I have to cut out this afternoon. I'm gonna go pick my boat up from the shop and drive it down home off down the river. It's gonna be, I don't know if I'll be home before the close, so if I get anything out to you, if there's anything big, I usually don't comment or react too much after hours on an earnings report. If there's a big move in either direction, I'll give you my 2 cents. But again, you have the levels. We're above trend now, and I'm talking on NVDA, but everything else. So watch that trend line. If you see, after earnings, after the call, especially, we're down below here. You can certainly try to gain bounces off the 200s and things like that, and these other levels. If you want additional levels on the video, I'll be glad to give them to you. Let's wait and see. You already have my long-term targets. Right now, that's really where my focus is. Let's see how we react after earnings, and then we'll go from there. That is it. I'll do updates later. I'll tell you, treasuries, the yields, they're holding those support levels. Remember, resistance on yields, support on price, but yields remain elevated. And as I said, the longer that happens, the bigger the impact is going to be on the economy. Remember, like I said back, I'll show you real quick, and then I'll wrap up. talked about it going back here for months, that it was a function of these zones, which is IEF. Remember, the lower IEF goes, the 10-year Treasury bond ETF, the higher yields are going. And so this was a function of obviously price. We got down here and it did. That's when the market corrected when we got into my orange zone. But as I also said, it's also a function of time. In other words, the longer that yields remain elevated, the bigger impact it is going to have on the economy, both the consumer and businesses that, especially corporate debt, especially small caps that have to refinance. They're much more dependent on borrowing than large caps. The small caps also tend to average about 5 years on their debt maturity. So they were, locked in when rates were near zero or uber low after COVID, and they're all starting to come due. And you can see the Trump pump got all faded, mostly faded on IWM. Big divergent high, nothing but selling since that Trump pump. But this is the trend line that the smallies need to break right here, and then you probably see more downside to them. Okay, let me wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.